Ladies and gentlemen, I'd like to welcome our first speaker, Ben Thomas. Ben has devoted his entire life to the red meat industry, with a large amount of that time being spent working on farm. Ben's understanding of international and domestic beef markets, and in his current position as Senior Beef Market Analyst with MLA, has resulted in him becoming highly sought after by beef producers and industry professionals across southern Australia. We are also very lucky to have Ben here today because he's about to head off tomorrow for his first attempt to try and climb Mount Kilimanjaro. So I think I can confidently say, Ben, I doubt anyone here is complaining about prices at the moment, maybe with the exception of Mark from JBS. And I think we're all very keen to hear your thoughts on where our cattle industry is headed into the future. Welcome, Ben.
Thank you very much, Jen, and also thank you, Greg, for the invitation to come down and present and speak here today. It's always an absolute pleasure to come down to these forums, and especially in Victoria. They're always good attendances, good turnouts, and it's always an absolute pleasure to come down here. Now, as Jen said, I'm actually pretty damn excited at the moment. One, because I'm going on this holiday tomorrow to attempt to climb Mount Kilimanjaro. But also, just with how strong the cattle market is at the moment, it's been an absolute cracking year. As soon as markets kicked off at the beginning of 2015, they really jumped and jumped quite significantly. And aside from dipping only very slightly throughout April, they've continued to climb and find new highs. And at the close of markets yesterday, the ECI was at 554, with some of the southern markets, and NVLX Barnwather being one, CTLX Carcore being another, averaging EYCI cattle averaging 600 cents a kilo. So that's quite impressive. That's quite encouraging. So what I'm going to talk about today is three areas actually. One, I've just got a few slides up front about MLA, new Managing Director's orders, to have a few compulsory slides, so I'll go through those ones. And then I've got some supply and demand projections, and then I'm just going to finish off with a couple of the bits of information that me and my team and I put out, and it's free for all producers to subscribe to, and it just gives you a good snapshot of what the markets are up to. So firstly, Chris has already touched on this slide here, but MLA is a R&D company with basically our money getting spread between marketing and R&D, and the market information and the whole NLRS network that I'm a part of, that's where that comes under the R marketing dollars. Just a bit of a snapshot of the MLA membership. We've currently got around 50,000 members. As you'll see, it's the grass-fed cattle producers that make up the overwhelming majority of that, but then there's also quite a significant and important proportion of sheep and lamb and goat producers as well that make up membership. So some of the benefits of being members is getting free entry to MLA organised events, and then also free entry to all of the free MLA information and subscriptions and things like that. And just a little bit of a snapshot of how the levy is divided and spent. Looking at the top row, you'll see in the far right corner that the cattle levy is $5, as you all know too well. And for grass-fed cattle, 92 cents of that money goes towards research and development, and that's actually matched dollar for dollar, and that, as I said, is where the market information part of MLA falls. $3.66 goes to marketing, and some of the campaigns that have recently been done is your Better on Beef campaign domestically, and then there's a whole range of campaigns that occur internationally. And then there's a little bit of money that goes towards the Animal Health Australia and the National Residue Survey. So on to the supply and demand side of things themselves, and I always like to start a presentation just by showing where the rainfall has been or where the lack of rainfall has been over the past few months, just to get a bit of a feel for for how the country's faring and where the numbers are coming from. Now, as you can see, in New South Wales over the past 3 or 4 months, it's actually been pretty good rainfall. My parents and family are up in Tamworth, and I know my old man's pretty happy with the amount of feed that he's got around at the moment, and with the amount of water in the dams as well. But over in WA, parts of Victoria and also through central Queensland, it's unfortunate that it's still quite dry, and especially up in Queensland, we're still seeing quite large numbers of cattle coming onto the market. That's also the case over in WA, and when we look at the lambs over there as well, there's quite a few of them coming onto the market at the moment as well. We're going through a period now, as you'll see, the 2015 bar shows the number of cattle that are forecast to be slaughtered this year, and it's actually expected to be around 9 million head of cattle. You'll see in 2014, the number of cattle that was slaughtered was 9.2 million head. If we throw live exports onto the top of last year's figure, which was 1.3 million head, we sent quite large numbers up to Vietnam, Indonesia, also up into China. When you add those two together, last year we turned off 10.5 million head of cattle. 10.5 million head of cattle. We've never done that before. The only other time in history when we've done something comparative to this, when we throw the live export onto what's expected to be slaughtered this year, it's going to be about another 10 million head as well. So there's going to be virtually 2 back-to-back years of more than 10 million head of cattle exiting the system. The only comparable time that we've done that in the past was back in 1978 and 1979. And that's when the Aussie cattle herd was estimated to be at around 33 million head. Now, our cattle herd at the moment, because of that incredibly high cattle slaughter and live exports, so the incredibly high turn-off over the past 2 years, our cattle herd's estimated to have dropped from what was 29 million head. Now, 29 million head was the highest it had been since back in the late 1970s that we talked about, and now it's expected to be down at around 26 million head, which is the lowest it's been in over 20 years. Now, the flow-on effect of that is going to be in 2017, when the number of cattle available for slaughter is going to be less than 7 million head. Now, that's going to have a really significant impact in the entire beef industry. When we have a look at the volumes of beef that we're going to have available to process, export, and even on the domestic market, it's going to be a very, very interesting time, especially when you compare just how tight that is to where we are right now. And we've had 2 back-to-back years of very high beef production and slaughter. When we peer at the statistics a little bit closer and break down what is actually being slaughtered and have a look at the females, I really like this chart. The green line down the bottom shows the 5-year average proportion of females that are killed, so of the total cattle slaughter. So you'll see in May and June, that's typically the peak time. We'll kill around about 49% of the monthly kill is made up by females. And then you come into October and that dips down to around 43%. So it's very seasonal, the long-term average percentage of females that are killed. If you have a look at the yellow line, that shows what was slaughtered in 2014, and for virtually the entire year, except for the last couple of months, for virtually the entire year, females made up more than 50% of the national kill. And then if we have a look at what's happened in 2015, it's virtually been on par with what we did last year. Now, that's incredibly significant because that means that not only is there more females being killed than what is normally the case, it means there's going to be a lot less calves coming through the system too. Now, Mark will probably tell you that there's quite a large number of pregnant females that are also being slaughtered too. So that's only going to add to how much slower or exacerbate how much slower the herd rebuild is going to be when we do eventually get widespread break in drought conditions, and there is significant restocking interest. I always like to look over at the US. The US is such a large driver of what occurs in the global beef markets. And the western third of the country still is in quite severe drought. But some of the key cattle growing regions are about 2 or 3 years ahead of us in terms of where they are in a drought situation. And their female cattle slaughter chart looked exactly the same as this last year and also the year before. Now there's been an improvement in the feed conditions, and it's actually the exact opposite to that. So the green line being the 5-year average sits well above what they are currently doing. And I'm not sure if you're aware, but over in the US at the moment, cattle prices are at incredibly high levels, and it's as a result of the very tight beef production, but also that really strong restocking interest. So that's something perhaps that we should expect over the coming years, or at least once there's a good widespread break in these drought conditions. As I said earlier, the national cattle herd is on track to become what's going to be the lowest it has been in 20 years. So in the space of 2 or 3 years, the cattle herd's gone from being the highest it has been since 1978 at around 29 million head, a fraction over 29 million head, to what's dropping 3 million head to an estimated 26 million head. So of course the flow-on effect of that is going to be tighter cattle availability for the coming years, and we believe the herd rebuild is possibly going to be slower than what otherwise would have been the case because of, one, how high female slaughter has been, and we've talked about that, the fewer calves coming through the system. But on top of that, the cattle market's so strong at the moment, there's a lot of producers cashing in on what's good prices, so perhaps inducing turn-off to be higher than what otherwise would have been the case. Also, with how strong the cattle market is, it's a bit of a double-edged sword, really, because for those that have destocked and are looking to rebuild, it's a very costly exercise to get back in at the moment. So we believe that the herd rebuild is perhaps going to be slightly slower than what otherwise would have been the case. It's going to dip down. The cattle herd's going to dip down to around 26 million head by 2016. And by the time we get out to the end of the projection period there at 2020, it's highly unlikely that it'll be anywhere near being the size that we have just had. Coming to cattle prices themselves, and as I said at the start, it's been an incredibly extraordinary year. The yellow line shows what the 5-year average is, and it doesn't really show it that clearly, but you can see there's typically a seasonal increase in April, before dipping down in June and then picking back up again in September. Now this year, at the end of last year, the final sale in December 2014, the Eastern Young Cattle Indicator was at 376 cents. 376 cents. We had some pretty good rain over Christmas, and when markets kicked off 2015, they certainly did start with a bang, and that red line shows that pretty clearly. Within weeks, the Yeki had not only broken through 400 cents, but it was saying hello to 450 cents. And there was quite a bit of media interest around that. And I can assure you there's a lot of journalists ringing up wondering when the last time was we had an EYCI over 400 cents and how long had it lasted. Now, it was back in 2011 and it lasted for 6 weeks. As you can see here, the Yeki not only started the year above 400 cents, but it's said hello and goodbye to 450. It's broken through 500, and as I said at the close of yesterday's markets, it was at 554 cents per kilo carcass weight. So the question is, how much further will it go? How much further will it go? To be brutally honest, I think it is a little bullish to even try and put an estimate on, whether or not it would get to 600. It is encouraging, it's very positive that there are some individual markets out there that are at 600 cents. But I think considering how tight supplies are going to be, I think there should be a fair bit of confidence that the current market will at least hold. Now, 550, that's a pretty damn strong market. And if the market does hold for at least the next couple of years, I think that's a pretty good news story for producers with cattle to sell. Another area, as I said earlier, I really like keeping a close eye on the US. The US is the world's largest beef producer, and it's also the world's largest beef consumer. So any changes in market dynamics over there usually ripple on throughout the global beef market. Now, they have gone through a period of having record high prices on the back of very tight production. In fact, beef production over there was the lowest it had been in 20 years last year, the lowest it had been in 20 years. And over that 20-year period, global beef demand has increased quite significantly. So the two factors have combined to create what was record cattle prices. Now, they have come off the boil, but they are still, they're actually down to about a 13-month low now, but that's still well above where they were, during that period 13 or 14 months ago. So in other words, where they are now, only a year ago, was actually the record price. So they're still quite high. And according to the futures markets, which they have over in the US, even when you look out to 2019, 2020, the markets are still above where they averaged in 2013. So that's a pretty good proxy, or a pretty good yardstick of, and should provide some pretty good confidence about the stability in the Australian cattle market and the strength going forward. Feedlot buyers have been absolutely critical. It's obvious, it's pretty obvious that restocking interest has been quite limited over the past 18 to 24 months, purely because of how dry it is. But what's really been an important factor in most of the young cattle that have been purchased is just how strong the feedlot demand has been. Feedlots are in fact at virtually capacity and have been for the past 6 to 9 months. According to our quarterly feedlot survey, there's record numbers of cattle on feed at the moment, and that has been the case for the last, as I said, 6 to 9 months. And feedlots have actually made up around 54% of EYCI purchases this year. So they've been critical, and there's even been a lot of out of the paddock quotes for feeders buying feedlot cattle for around 300 cents per kilo this year. So that's quite encouraging. Look, when the drought does break and we do see a lot more restocking interest in the market, it is likely that the feeder purchases are going to come back down. And we will likely see our numbers on feed come back to what's more a long-term average. At the moment, there's around 950,000 head of cattle on feed in Australia. The long-term average is down around 750,000 head. So it's likely that feedlot contingent will probably slowly phase out of the market to a very small extent and be replaced by a greater proportion of restockers in the market. When I come to demand, Australia currently exports around 72% of the beef that we produce. And I've got written up here, is 1 million tonnes the new normal? You'll notice in 2013, that was the first year that Australia had ever exported more than 1 million tonnes of beef. And prior to that, I think there was a lot of questions in the industry as to whether or not we would ever be able to export more than that volume. Well, we've done it for 2 consecutive years. We're on track to export a record volume of beef again this year. There's a number of factors working in our favour. The Aussie dollar is weakening. I mean, we've got to go back to 2012, and the Aussie dollar versus the US dollar was averaging about $1.10. We're now down to around 73 US cents. So that's quite a significant reduction over that period, and only makes our product more competitive in the international trade scene. So the currency's really been working in our favour. We've had a breakthrough with market access. In the space of a very short period of time, we're going to see tariff reductions on our product into Korea, Japan and China. Combined with the US, those 4 markets make up our largest market. So with the tariff on our beef reducing over time, that only is going to make our product more competitive. So even going forward, those factors are going to remain in play. And then, of course, there's that growing demand in Southeast Asia, the Middle East, the developing countries that are looking to secure and source clean and safe product, puts Australian beef in a very good and favourable position for exporting. So the question is, and I firmly believe it is the case, that going forward we are going to, on a consistent basis, export more than 1 million tonnes of beef. And that percentage of product that we do export, it's currently at 72%, that may continue to increase to 75, 76% going forward. And it's not a case that Australians have lost their taste for beef. I mean, Australia still is the largest single market for Australian beef, and we still eat around 28 kilos per person per year, which on a global perspective is very high. So it's not so much that Australians are losing their taste for beef, it's more a case of the international markets are paying slightly more for it. Another really interesting statistic that I like to look at, and I think it's particularly relevant to this group, is the chilled grass-fed beef going to the US. Now, chilled grass-fed beef is one of the more higher valued products going into that market. And as you can see, over a number of years, the volume has been increasing, and last year ended up being a record at around 60,000 tonnes. Now, after just 6 months, we are already over halfway through what we exported last year, and it's likely we'll probably break that record again. Now, that also, the reason that's an exciting trend or statistic is because it is a high value product. So what that means is that there's more value to filter on through the supply chain. Most of the beef produced in the US is grain-fed, so that demand for grass-fed product, there's very little grass-fed product grown over in the US, and according to a number of surveys that we conduct each year, there's a few perceived health benefits for consuming grass-fed beef. There's very limited available, and when you throw it all under that organic, natural grass-fed umbrella, the demand for all of those sorts of items has been steadily increasing over in the US. So that's a particularly interesting statistic, I think, and very relevant for this group. I think I'm starting to get a bit tight on time, so I'll just pull up with a conclusion. And I just really want to reinforce the fact that Australian beef supplies are forecast to tighten considerably over the coming 2 or 3 years, and our beef production, even by the time we get back out to an increased herd, by the time we get to 2020, the amount of beef produced in Australia will not go anywhere near matching what we're going to produce this year or what we produced last year. And 2017 in particular is going to be a very tight year. The herd rebuild is going to be a slow and gradual process. We're estimated to be down to what's a 20-year low herd at around 26 million head. And for the reasons that I've gone through, we believe that it's going to be a very slow and gradual rebuild with the herd. And it's very important to keep an eye on production developments in the US. As I said, they're the largest beef producer and also the largest beef consumer in the world. So any increases in production or any market dynamics that occur over there usually ripple on through the rest of the world. So it is very important to keep a close eye on what's happening in the US. Just before I finish, I just wanted to show a couple of the reports that we put out on a daily basis. And this is our indicator. The two here are our EYCI summary report, which is the one on the left, and the one on the right is some daily price indicators. So for our generic trade steer, heavy steer, medium cow indicators, it just shows how the markets have performed for the day compared to the week before and the year before. And you'll notice there's a couple of charts and graphs down the bottom too. So it's for cattle and also for sheep. And then the EYCI daily summary chart on your left-hand side gives you a very detailed breakdown of all the sale yards that are included in the EYCI. And it shows what the price is for the day and what the average is for your particular sale yard or your closest sale yard or the one that you're most interested in relative to where the EYCI is. We've also got, and to subscribe or get those free market reports, it's just a matter of sending the nlrs@mla.com.au an email and just request for the daily indicators or the daily summary. We've also got the Meat and Livestock Weekly, which is basically a weekly wrap-up of what the sheep and cattle markets have done. Also, it goes into some of the global factors that I've talked about today. Again, that's free, and if you would like to get on that distribution list, it's just a quick email to nlrs@mla.com.au. And if you haven't already downloaded or if you didn't know about it, we've also got a mobile app, which is free to download from the App Store. Just type in MLA Market Information and it should be there. It's also free to download and it's got our daily indicators and all of the market news stories and information there as well. So I encourage you to either sign up to some of our reports or download that app. So thank you very much for your time. I did plan on having time for questions, but it may be best to just roll on into John, I think, and we'll save it for the panel discussion shortly. So, look, thank you very much for your attention, and thank you very much for participation, and I hope you enjoy the rest of the day. So thank you very much.